Hi, this is Jim Welsh from macrotides.com. Thanks for tuning in. I think global growth is going to slow in coming years relative to its pace of the past 30 to 50 years for a number of reasons. There are 7 factors that have already peaked or are going to slow and in some cases reverse. So let's take a look at each one, starting with global trade. In 2017, global growth was 3.8%, but according to the IMF, is expected to fall to 3% in 2019. The IMF said the primary driver of the slowdown has been a retrenchment in global trade and business investment in response to the ratcheting up of trade tariffs since early 2018. For the past 70 years, global trade has been a significant engine for the global economy, rising from just 5% of global GDP to almost 25%. This trend was supported by a marked decline in global trade tariffs and trade agreements. The rising tide of trade ushered in a period of competitiveness that resulted in lower inflation and access to products from around the world for consumers in every country. The surge in global competitiveness, however, pushed companies in advanced economies to lower their cost of production and shift production outside their domestic economy to take advantage of cheaper labor. In advanced economies, the migration of production resulted in the loss of millions of middle-class jobs, even as the increase in globalization lifted hundreds of millions of workers in Asia and elsewhere out of extreme poverty. For those adversely impacted in advanced economies, as factories were closed and jobs were lost, the reduction in extreme poverty is merely an abstraction that had and continues to have little meaning. According to the United Nations, extreme poverty is a condition characterized by severe deprivation of basic human needs, including food, safe drinking water, sanitation facilities, health, shelter, education, and information. According to the United Nations, there were 1.9 billion people living in extreme poverty in 1990. By 2015, it had dropped by more than 70% to just 734 million people. Nothing like this has ever occurred in human history, and the increase in global trade and globalization played a significant role in making it happen. In the decade leading up to the financial crisis, world GDP grew consistently above 4%, except for a brief dip in 2001 and 2003. Of course, it dipped in 2009 as the financial crisis took hold, before rebounding to 4.3% in 2010. But in 2011 and 12, world GDP slumped to less than 3% and has barely climbed above 3% in the years since. With growth coming up short, many countries chose to look at trade critically, which is a far easier target than addressing domestic issues that could be potentially devastating or political suicide. Beginning in mid-2012, G20 countries in aggregate moved to protect their domestic economies by adopting protectionist measures at a faster pace than measures to liberalize trade. This trend accelerated in 2018 as the U.S.-China trade war erupted and global growth slowed further. This shift away from globalization is occurring as the rise in populism and nationalism has taken root around the world. This represents a tidal change that is not likely to be reversed, even if a ceasefire is achieved in the trade war, since other factors are also at work that I'll discuss in future videos. Thanks for tuning in. May something good happen for you today.